What's up, guys? It's Rey-Jay back with another video. And in this one, I want to break down what's happening with NIO, Tesla, SPY, and the overall markets. I'm going to talk about why the market started off very strong, getting a big push, only to get a big rug pull towards the end of the day as we had a new piece of news that came out. But just note that I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out my Moomoo link. If you deposit $100, you're guaranteed 5 free stocks. If you deposit $2,000, you're guaranteed 30 in total. And the offer ends very soon at the end of March. Anyways, what's happened to the market? We saw NIO push to this 4.5 area trying to get to our 200 EMA. We weren't able to break past that. However, we got this rejection. Same thing happened to SPY. Check out the chart, guys. We got this huge pump near all-time highs. Then we got a massive rejection. The same thing happened throughout the markets. The market was in the green, performing very, very nicely. Then we got this huge rug pull. The question is, why did this happen? Why did the market end up doing this? Well, the first thing you have to remember is that our PCE numbers came out. Inflationary numbers were all aligned with expectations. This was good so far. On top of this, we got some decent news involving Apple's earnings that helped the market push to some extent. And then there was a lot of talk involving the tariffs that are being proposed by President Trump. Now, he proposed that yesterday, saying that they're going to likely do it as soon as February. And then there was a rumor that came out where they were saying that, oh, it's not going to happen. It's just a negotiation tool. Then we had the press secretary come out and actually say that actually that's not the truth. They're going to be coming out as soon as tomorrow. So with all of this, all this uncertainty that's been coming out, the tariff news is what caused the market to sell off towards the end of the day. The question is, what does this mean for the U.S. economy? I was doing a lot of research on this, and I just want to say that there are some key things that are worth mentioning. You have to remember that Donald Trump is proposing 25% tariffs on Canada and Mexico and 10% tariffs on China, and they should be going into effect as early as February 1st. Now, we don't know for sure if I don't know 100% for sure if this is going to be a negotiation tactic or if this is truly going to happen. We'll find out tomorrow. Sometimes there could be last minute decisions that end up being made. But if this ends up being the case, it's going to have a big effect on the U.S. economy. So when it comes to the way things are looking, you have to remember that Donald Trump said that there could be short-term pain because of this. Lots of sources do say that. So Trump himself said that tariffs may cause a short-term disruption in our economy, but he believes it's going to be worth it for the long term. Elon Musk, who's one of Trump's biggest allies, said the same thing. He said that Trump's tariff plan could also cause short-term pain for consumers, but he believes it's going to be worth it for the long term. So I do agree. Excuse me. I agree with the fact that there is going to be some short-term pain. But will it be worth it? That's up to you guys to decide, depending on a bunch of different factors. So how does this affect the U.S.? You have to remember that nearly half of all U.S. imports, more than $1.3 trillion worth, come from Canada, China, and Mexico. And looking at this overall, with the things that are going on, this is going to have a big effect on us. They make up nearly half of U.S. trade, so Canada, Mexico, and the U.S. You guys can see the charts right here. This came out from the Council of Foreign Relations. This is the source right over here. It's also worth mentioning that if you look at the top 5 U.S. imported products, we have cars, crude, computers, motor vehicles, and a large percentage of them come from China, Mexico, and Canada because of their advantages, right? China has comparative advantages in terms of their ability to produce things. We get a lot of oil from Canada, and there's other factors just like this. The U.S. is also a little bit less reliant on trade relative to its peers, so that's something that's very interesting. And then moving forward, how would this affect us as much? Well, you have to remember that these countries can have a reaction to this, whether they choose to trade less or if they end up, trying to increase tariffs back on the U.S. So we'll see how that affects things. And then also, Canada and Mexico, they depend a lot more on the U.S. than vice versa. They're very dependent on the U.S., so it's less likely they're going to be trying to just cut trade. Whereas China's in a different situation because when you look at China, they're a little bit less dependent on the U.S. If you look at this right here, relative to their current exports, because they also export to the rest of the world. But the U.S. is still a massive partner of them, and I believe that they're not going to want to decrease trade way too much because it still benefits them a lot more. So what's going to happen as time goes on? We're going to be looking to see how these industries are going to be impacted by them, and many people believe that this is going to lead to a lot more. This could lead to higher inflation factors just like that, but that's to be determined. But then that's more of a short-term projection. For the longer term, as many months and years progress, the U.S. is going to generate more revenue. The extent of revenue depends on how the countries respond, and I will talk about the other factors. And then can they use that revenue to offset the pain? And I'll talk more about that in just a minute. But that's what I'm essentially seeing right here. So I'll give you guys some examples once I go over some more information about this. That's going to be very important. The world is basically bracing for new tariffs under Trump. Is it worth it? We will determine that. So actually, I'm not going to determine that. I'm just going to give you guys the information. That's up to you to determine. But that's based off your own opinions and your own thoughts. So we have these tariffs, right? We want to increase them by 25% or impose 25% tariffs on Mexico and Canada, and then 10% on China. Okay. All right. So what is this going to do? Well, for the short term, I'm seeing studies suggest that this could have a negative effect on GDP. Some sources say it'll cause GDP to drop by 0.4%. Other sources say over 1%. This is for sure going to be more negative for GDP because they make up a big percentage of our trade just for the short term, right? For the next, I would say 3 to 6 months, for sure, this will negatively impact us before things begin to normalize. Inflation will go up for the short term. I believe that as well. Prices will go up as a result of this. It's going to affect consumers for the short term. This is just a short term effect of this. On top of this, other countries may try to increase their tariffs back on the US. This is dependent on what their reactions tend to be and what they want to do with that. We'll see about that. But that could be a little bit negative for the U.S. And then this could also hurt businesses and cause more bankruptcies for the short term. It may de-incentivize businesses to trade with these countries or maybe try to manufacture more in the U.S. So that could be another big effect. But if anything, that could lead to higher costs as well because of the fact that the U.S. has benefited from many of these comparative advantages by trading with Mexico, importing more goods from China, and etc. So there are some negatives for the short term. We can't deny that. Elon Musk is saying the same thing. So is Trump. He did mention that. But they're arguing that for the long term, it's going to be worth it. And do I think that? Well, honestly, guys, I can't say that for sure because it depends on so many factors. Let me explain. The governmental revenue is going to be going up. So the government could be making, I saw studies say that they could be generating over another $400 billion or maybe something like that. It all depends though on, how much they truly make. And also it depends on if the other countries impose more tariffs because if the tariffs remain the same, the amount that China is charging in these other countries, yes, the US can make hundreds and hundreds of billions more off of this, and they could use that money to try to offset the pain. They could invest that money into the US, try to create more jobs, and do things like that. But if China, if Mexico, if they start imposing more tariffs, if they trade less with the US, it's going to affect this revenue. It's going to be less revenue. And I just don't have the true numbers. It all depends on so many factors. I can't truly make any calls yet. So, for example, if we were to make like $400 billion normally, assuming everything's okay, that could help the US. But then if that $400 billion is at a cost, right? If Mexico starts increasing tariffs, if China starts doing the same thing back to us, that could start going down because the US is going to get taxed as well. But can we use that money to offset the pain to GDP, to help boost our GDP invested into American manufacturing? Can we help farmers? Can we use that money to really kind of like weigh in the difference, right? If there's going to be short-term pain, can we offset that pain with the revenue the government's going to make from this? That's what the real question is. Trump says yes. Some people say yes. Other people say no. That depends on, in my opinion, how much revenue we make. How does China respond to this? What happens to American businesses? And so many, ifs and buts, which I can't truly determine right now. So it's like a big trade-off. Is it worth the trade-off? Some people would say yes. Some people say no. There's more factors involved, but this is just kind of like what's going on a nutshell. If you guys could have your own opinions too, we will have to wait and see. You could argue another pro is that there's more fairness because of trade deficits, and this could also be used as a negotiation tactic to get other countries to do things that Trump wants, right? It could be used that way, right? He could get Mexico to do something that he wants them to do. He could get China to try to capitulate. Like those are just some examples. But it depends, right? Would this be worth it? Would this really help the U.S. create a lot more jobs? Will it be worth it? That's to be determined. I can't truly say that, and maybe you guys could have different opinions on that, which I respect. But is it worth the short-term pain of higher inflation, negative effects to our GDP going down, kind of hurting businesses and trade to some extent? That's also a possibility. Is it worth it? That is up to you guys to determine. I'm not here to give you guys or force you to think anything. That's your choice. But these are like the main factors in a nutshell. I know there's so many more factors involved. I'm just trying to make this as simple as possible and try to make this very, very quick. So we will see. We'll find out what happens over the next couple of months. For now, the market had a more negative reaction. Going into Monday, it's going to be the first day of February for trading. Just know that we have the ISM manufacturing numbers coming out in the morning on Monday. On Tuesday, we have some JOLTS job opening numbers. On Wednesday, we have the ISM services reports that may cause some more volatility. And then we have a bunch of Fed speakers on Wednesday. I'm not sure if Jerome Powell will give a speech. I don't think he is, but we'll see about that. But then on Thursday, we have some important numbers. We have initial jobless claims and even more Fed speakers that could cause some volatility. And then finally, I think we have even more Fed speakers and then payrolls data and unemployment numbers all coming out for Friday. So a lot of data coming out throughout the week, especially as we're starting a new month. The ISM manufacturing numbers and then the jobs numbers are going to be very important, so get ready for all of them. And we'll see what this leads to, at least as time goes on. For other factors, I just want to mention we have big earnings as well. We have Palantir announcing earnings on Monday. On Tuesday, we have PayPal, AMD, and Alphabet. Tuesday is going to be a big day. Wednesday is when we have Disney, Uber, and Ford announcing earnings. And Thursday is when we have Amazon and many others. And finally, Friday is going to be very, very quiet. But Tuesday and Thursday will be the two biggest days for earnings. We'll see what happens. The market is still dipping here. We have to see if we could hold 600 by Monday. I'm hoping we try to get a little rebound first, but then if this continues to lead to a multi-day downtrend, we could rebound a little bit, then continue to dip lower. It is possible this continues. Kind of a weak close, a big rejection on the daily time frame. I don't think the downside's done yet. We might dip a little bit lower. We could be dipping closer to 599 near our 20 EMA. So look for a little rebound and maybe continuation lower. Then we'll see if we get a bounce at least off like 599 or so. If not, we could be dipping all the way down to 595. So I anticipate we might dip a little bit more and we'll see if we see buyers defend at 599. We'll give this some time to develop. And if anything, I just want to say the chart's looking a little bit weaker. So we might dip a little bit more, guys, before we see some buyers try to defend this 20 EMA. On the QQQ, I think we could be retesting 520. If that doesn't hold, we could be tipping even lower. I want to see if we bounce off 520 or not to see a small rebound. If we don't, this could just be like a downtrend that's being respected now. And we could try to dip a little bit more if that ends up being the case. For the Russell, we need to see if 226 holds. If it does not hold, we could be dipping lower towards like 225. We need to see if buyers defend 225 this time around. If not, we could be retesting this trend line. There's a big gap on the daily, so we'll see if that gets filled or not. On ES, we're looking a little bit weaker. We might be revisiting 60.50 and 60.20 in that range. We'll see if buyers defend here or not, so just keep that in mind. For NQ, we had this wedge. We broke out, filled the gap above, then we rejected. So we're going to be watching if 21,500 holds. If not, we could be dipping lower. Nvda is dipping now. We need to see if this could hold 120. If not, we could be dipping down to 117. If you look at Tesla, for example, we were making lower highs right here. We were trying to break out. We did a great job at pushing to about almost 420. And unfortunately, we did not close above our trend line. So I hope Tesla tries to push again. I hope we could try to do it. If we can't hold above this trend line, we're at risk of returning to about 390 again. So still showing some weakness. We haven't been able to break resistance yet. Aapl pumped really well to about 246. Got a huge rejection. There is a gap down here. I wouldn't be surprised if we dip a little bit lower. Might rebound a bit towards 238, so then we could reject all the way down to the low 230s, and we'll have to see what happens from there. For coin, we have this rejection here. We could be revisiting around 284 and then 276. Might be a little bit of a dip that's coming, so be prepared for that. Amazon's very flat right now. It has earnings next week, so it shouldn't dip too much. Might try to base at 235 before it tries to bounce to 240 again. But I think it's going to hold up just fine. Meta got a rejection here. Might dip a little bit more towards like the 680 area, and we'll see if buyers defend around the 678 to 680 just to see what the reaction happens to be. Microsoft, unfortunately, this is still kind of weak right here. We're going to be looking for a retest of 412. We need to see if this holds at 410 to 412. Otherwise, it could be dipping into the low 400s. But even if that's the case, it's going to be fine because we have this range. It loves to get bought back up around like the low 400s anyways. So it's at strong support. We will see if buyers defend it there or not. And last but not least, we have Google. Google is trying to push here. It's still holding up very, very nicely. If we don't hold above 202, though, there's that gap to fill back down all the way there. And there's another gap down here. We have earnings coming out. It might continue to hold up. As long as we don't lose 202, we could try to bounce again. So I think we're doing fine. So anyways, for NIO, if we can't get back up at 4.5, there's going to be a risk of us returning to about 4.2. There's a slight uptrend right here. So I like the fact that we're trying to make higher lows, but we need to see if this support holds right over here. We're barely at support. I am seeing a little bit of weakness with the Chinese tariffs being increased. So there might be a dip to about 4.2, and we'll see if we hold this trend line or not. There's still technically a slight uptrend by making higher lows, and there's like a possible cup and handle, but it depends on if we could hold this support or not. With that being said, I thank you all so much for listening. The market is looking a little bearish, might dip a little bit more, but we'll see if buyers defend at support. Might be a little bounce that comes before it may continue to dip lower after this big rejection. And what's happening is the market knows there might be some short-term pain with possible risks of higher inflation, some negative GDP growth, not negative GDP growth, but a decrease to GDP. So it's a little negative for GDP. And this short-term pain is what's causing some issues right now, which is why the market is starting to price this in a little bit. That's why the market is dipping the way it is. So I hope this video was as clear as possible. I thank you all so much for listening. We will see if the tariffs are worth it or not. I'm going to be very unbiased about that. We will see. And then for the short term, because there is going to be some pain, whether it's worth it or not, it's going to affect the markets. So keep that in mind, guys. I thank you all so much for listening. Have a good day and peace out.